In this video, we're trying to get a better understanding of the financial reporting environment. So let's start by looking at the actual definition of financial accounting. It's a process, and it's a process of doing things. You identify, you measure, and you communicate. What do you communicate? Financial information, and that's about an economic entity. And then you're doing it, communicating to these various user groups who's going to use it for making decisions. In the background, we have legal, economic, political, and social forces that actually play a role in the financial reporting and financial accounting. So let's focus on what really is pushing the whole context here. We have user groups that have money, capital, primarily investors and creditors, and they want to do something with that money. We have businesses that want the capital. So basically, there's an exchange. Let's give the information to the user groups who actually want to make the decisions about how to spend their capital. Let's give that information there, and then the user groups, if they get good information, they can make wise investment decisions that are good and enable efficient resource allocation. So basically, the process directs capital flows to their most productive uses. So the demand for financial information is there regardless of what groups and entities drive it. It's there because there's demand for it based on economic reasons. Next, financial information is composed of more than one type. We focus on financial statements and footnotes a lot in this course, but we will learn a little bit more about the other components of financial information that go into an annual report. Not to worry about it just yet. We know the four basic financial statements: the balance sheet, statement of comprehensive income, cash flows, and shareholders' equity. You're going to get to know those in more detail throughout the semester. Here are user groups that are actually using the information being provided. The top two are the most important from where FASB and GAAP stand. Equity investors, they want to invest in stock, and then creditors, they want to provide, includes banks and other financial institutions that lend money or credit. Various other players play a role here in using information. So we have competitors, financial analysts, employees and labor unions, suppliers, customers, and government agencies. All of these groups are external to the organization and have no access to the financial data unless it's communicated, and it's communicated in those ways we indicated earlier, through the financial statements, footnotes, and other financial information provided by the company. This is perhaps the most important slide of this presentation. What we're seeing is the players that make financial accounting and reporting work. And in the center, we have financial statements being prepared by the company. And they're being issued down to the blue squares to all the different users of financial information. But what makes that little flow work well are the surrounding groups that add credibility to the whole process. Financial Accounting Standards Board sets the rules so that we all use a certain GAAP and is consistent. The Securities Exchange Commission is a watchdog, kind of like the police, and they make sure that things are functioning well. Companies are preparing the financial statements in accordance with GAAP, that there's not financial misstatements. But it's not just that. We need more than that as a watchdog. The Public Company Accounting Oversight Board, they're helping create auditing standards. Those auditing standards help the external auditors. It provides guidance to them. So just as FASB provides guidance to the preparers of how to do what they need to do, the PCAOB extends guidance to the auditors so that they can do their job professionally and effectively. Now finally, we've got professional organizations. The AICPA is one of the largest ones, but that's made up of practicing CPAs. That group influences, provides lots of assistance to external auditors, to the actual preparers of the financial statements. It assists in many ways in promoting good financial reporting. So that's just a few of the major groups that make up the financial accounting reporting environment. And there's one more thing we should consider, and that is legal, economic, political, and social pressures that actually drive part of the financial reporting environment. And so there's lobbying that goes on, there's theory, believe it or not, and there's economic conditions that play a role. In addition, right now we have a drive towards corporate social responsibility. So here's an example of Johnson & Johnson, and they voluntarily give out money to help what's called Operation Smile. And this is a big important part of what they do. So it doesn't make them money, but it's part of being a good corporate citizen. That's driven in part by the social pressures that are going on in today's business environment. Companies all over the U.S. and the world engage in corporate social responsibility.